today on this important moment. I want to congratulate the CFA Society for starting this Ethics Challenge. I think it's a fantastic program. I think it's a beautiful thing to start with the students when they're in university, but prior to getting actually into the industry themselves. But more importantly, I want to congratulate the university students, because your participation in the CFA Institute Challenge is critical. Many universities offer ethics classes, but I would estimate the majority of students do not take the class because it's dull, it's boring. Their friends will make fun of them for doing the right thing. So you effectively have raised the bar amongst your fellow students to know that you are involved with a higher standard of integrity. And I want to thank you for that, because that is very important. Your participation is significant also because of the findings that are out in the market that show 65% of young people in Kenya look up to corrupt people. I was astounded by the statistics. It's a really sad state of affairs in Kenya. But we really shouldn't be surprised by the statistic, because worldwide, based on Oxford, Harvard, and other universities who have undertaken studies about human behavior, 5% of any given population will always do the right thing. Only 5%. 5% of the population will always do the wrong thing. And the remaining 90% will do the right thing, but only if they think they won't get caught. At least most of us in a lot of areas in our life try to do the right thing. We try to be in that 5%. But we have to recognize every single aspect of our life. We make choices. Is it the right thing? Is it the wrong thing? So we are in control of the choices that we make. So just keeping that in mind. Patricia mentioned that we've had a conversation in the past about ethics being gray. It's not black. It's not white. It's not clear-cut as the law. And it's most often murky. It's just, what degree of gray is it? Is it really dark gray, or is it a lighter gray? Okay? And this is why a lot of people get in trouble with ethics. It's because they don't understand the varying degrees. What's right, what's wrong. Something could actually be right in law, but still unethical. So you can't say that you're an ethical person just because you follow the law. Ethics is above the law. Okay? As you might know, ethics is a passion of mine. Just 2 days ago, the chairman of the Fund Managers Association recognized this after I finished telling him my story when I first started working in Kenya. From Bertie Madoff's Ponzi scheme, the sale of bogus mortgages, Wall Street's obsession with astronomical bonuses, to the LIBOR and currency manipulations, it seems in the last 10 years we have been bombarded with financial scandal after financial scandal. Unfortunately, Kenya has had its share of financial scandals due to fraud, theft, and corruption. We hear about the greed of government employees every day and the damage to the country as a result, but corruption is not limited to the public sector. Bank managers, auditors, and some employees even of the central bank are allegedly involved in the Imperial Bank scandal. Billions of shillings have effectively evaporated overnight due to unethical behavior. At this point, it is unclear whether depositors and bondholders will ever recover their assets. Pensioners, charities, small businesses, and others have had their lives overturned. Parents have had to scramble to find school fees, all due to behavior stemming from greed. We make investment decisions with the belief that bank auditors, directors, and senior managers act ethically by acting in our best interests. But it appears they have betrayed us. Kenyans often shrug and say, well, this is Kenya. I cringe every time I hear this saying, because it effectively means that we don't expect anything better. We don't deserve better. So we turn a blind eye. And as a result, the behavior continues. But we need to actually put people in jail for this behavior. The first company I worked for in Kenya in 1994 was owned and operated by an American. He ran a boutique investment bank. Almost 2 years later, I discovered how unethical he was. Effectively, he was stealing money. He stole money by siphoning money out of the company to pay for his new sailboat in Kalifi, send his wife and 2 daughters on a very nice European trip, and pay for his own lavish personal lifestyle. It would have been okay to do this if he had paid his employees and the taxes associated with those payments. And it probably would have been okay to do if he hadn't stolen money from clients who entrusted him with their retirement funds. Then he was supposed to invest those funds in the stock market. But he didn't pay his staff, he didn't pay his taxes, he didn't even preserve the capital of his clients. So effectively, he was using his own company as his own bank account. But according to him, it was his company. He could do anything he wanted to with the money. As a CFA charter holder, I have responsibility to distance myself from any unethical behavior. In this case, because the egregiousness was so serious, the only thing I could do was to quit. I then helped start another corporate finance consulting company after an investor willing to front the capital requirements approached me. But about after a year, I realized he wasn't ethical either. We had a client that needed to sell his property to pay, or to use the proceeds to pay off a bank loan, that the bank loan was threatening to shut down his business. So with the sale of the property, he would be able to save his business. So my boss, the investor who provided the capital, decided that he was going to find another investor to buy the property at a much higher price. He then told the client that he himself would buy the property at just the amount of money that was needed to pay off the bank loan. And a week later, then he sold it to the other client who was going to pay for it at a very much higher price. Guess who pocketed the money? My boss. So effectively, he was front-running the deal to the horror of the client. He got to pay off his bank debt, so he saved his business. But at the same time, he did not get the full value of the property that he was selling because my boss stole from him. I quit that job too. So it was that point that I started my own company. That was 17 years ago. Because I strongly believe in ethics, I've turned away clients who I thought were not ethical in their business practices. And from my previous experiences, I've learned that reputation is more important than money. I live by what my brother calls swan theory, the sleep well at night. And I would rather turn potential clients away and forfeit the nice fat fee, but still have my reputation intact. When I first started my business, I even carried around a laminated copy of the CFA Institute Code of Conduct and Standards of Practice. I showed my clients what standards I was required to abide by, and I expected them to not jeopardize my position. So I've turned away clients, but I've also had clients who were attracted to that, and so they hired me. I've had clients from the United States, South Africa, Rwanda, Ethiopia, Eritrea, Uganda, and Tanzania, besides those in Kenya. So you can make profit through ethical practices and have an exciting career. Turning again to our capital markets, have we improved over the years? It was while working at the first company in Kenya I had my initial exposure to some of the unethical practices of Kenyan stockbrokers. It isn't a coincidence that this particular stockbroking company is no longer in business due to its unethical practices, but fortunately, the dealer himself still operates in our market. But I sure hope he's cleaned up his act. While trying to invest client funds in the stock market, I had first-hand exposure to dealers front-running and claiming client dividends for themselves, even though the shares were purchased on a cum-dividend basis. As a result, I developed a deep mistrust of local stockbrokers. I've never invested in the Kenyan market since that point on the NSC, and I'm sorry, Jeffrey, to inform you that. Trust is hard to recapture. This choice has likely harmed me because I haven't been able to maximize my returns. because the Kenyan stockbroker, or the Nairobi Security Exchange has shown some very good returns over the years. But how many other investors are like me, who have lost trust in this financial market because of one or two individuals? I'm happy to see that the Nairobi Security Exchange did adopt the Statement of Investor Rights. I think that goes a long way in helping regain that trust. I hope the brokers are following it, and I hope the NSC is doing an audit on the brokers to make sure they're following it. My hats also go off to a stockbroker who in a few years past actually published in the paper a statement saying that they had fired 11 employees due to unethical practices. They even posted their photos. That was probably the first time that I have ever seen an institution actually take that blatant of action against unethical employees. They took them to court as well. Unfortunately, I don't know what the result of that court decision was, or even if it came to a completion. But it is only when employers, regulators, and others take action against unethical people that we can restore trust. Financial markets are built on trust and equity, and without these, investors will choose to invest in other markets. Our market isn't hindered by lack of capital to invest. It's hindered by not having enough product to invest in. But are our unethical practices actually causing companies not to list or to issue bonds in the market? I don't know the answer if this is actually happening still, but we need to figure out how we can build integrity and trust in this market so that we have 300 shares listed on this securities exchange, that we have 500 corporate bonds. We'll all live in a better place if that's the case. But integrity builds trust, and trust takes a long time to establish. And just like me, it can be lost in just one transaction. So what do we need to do to regain that trust? Well, as this says, we effectively need to put our clients' interests first and foremost at every point of a transaction. Our needs and our employers' needs are secondary. The clients must always come first, and this is the main fundamental principle of the CFA Institute Code of Ethics. The only time a CFA charter holder can put the client's interest secondary is if the integrity of the capital market is jeopardized. And that would involve insider trading. So to build trust and integrity, I'm proposing we implement 6 actions, and some of these have already been mentioned. Establish an online whistleblowing mechanism that is for the market as a whole. It's not necessarily each individual company having their own whistleblowing. The CMA sets up an online whistleblowing mechanism on their website. Employers will be able to report employees, clients will be able to report service providers, and employees would be able to report employers. All of this could be done without fear of retribution or lawsuits. Number 2, require all professionals operating in the financial services market to be licensed to prove their competency, not only in terms of fundamentals, but also in terms of ethics and legislation. But I am happy to report that the CMA is currently working on this, and they're likely to implement, well, it's already in process now, but I think we need to take this even a step further. I think all employees, including receptionists, should be licensed in one form or another. Remember, receptionists talk to clients. They need to know what to say, what not to say. Unfortunately, this also increases the cost of operation, but I think in the long run, the benefits will outweigh the short-term increase in costs. Number 3, require employers to report to the regulators and or where applicable the NSC the reasons why an employee left the firm. Were they caught doing something that they shouldn't be doing? What happens now is that these employees are let go, and then they go find another job in another service provider, and the one hiring doesn't know why they left. If you call them on the old employer on the phone, they'll just say, yes, they left. They won't necessarily get into the details. Again, they're afraid of lawsuits. So this person who continually does poor and unethical actions gets hired over and over and over again. And remember the broker I talked about? He's still here. Number 4, allow a summation of any complaints and actions taken against any individual or firm to be available to the public in a timely fashion. If we want to hire a broker, a financial advisor, a fund manager, I should be able to go online and find out if any complaints have been registered against them. The CMA publishes in its annual report sanctions that are taken against licensees, but typically by the time we see this information, it could be over 1 year old. It would be more effective if this information was available on the website as soon as the sanction is given. Number 5, allow employers, the NSC, and or the regulators to undertake lifestyle audits of suspected employees. And I was very happy to hear that many of the students actually had recommended this. And finally, 6, require all financial advisors, stockbrokers, and investment banks to uphold fiduciary duty rather than just a high standard of care. That way, all clients' interests will be required to be placed first and foremost, above the firms and above the employees. This is probably the most controversial of all my suggestions because this is not even done in other markets, in developed markets. But maybe this is Kenya can actually mean that we practice the highest standard. I would love to see that. If employers really want to stand out, they could even hire independent auditors to explore how well they put clients' interests first. And that would be an even bolder move, is to publish those results. Wouldn't this go a long way for firms to attract clients? While the 6 suggestions mainly focus on service providers within the financial services sector, we also need to watch the unethical standards or signals that we send to others in our everyday lives. I was in the States about a month ago and I heard a radio DJ joking about how he cheated in school. Everyone thought it was hilarious. What's funny about cheating? It was like he was promoting it. See how clever I am? Okay, but it reminds me of a story too of a friend outsmarting a hire purchase company. She gave all the false information when she fully furnished her new flat, knowing she had never the intention to pay a single shilling back. All her friends congratulated her and laughed at her cleverness. The company is no longer in business, Kenyans lost their job, investors lost their capital. That's not funny. In today's world, parents and teachers are encouraging students to cheat. We hear about this continuously every time results are published. Parents even teach their kids to beg and steal. While I was attending a pension trustee meeting at Mount Kenya Safari Club, one year a little girl dressed in her Sunday best approached me, held out her hand and stated, "Give me shilingi." The mother, dressed as if she were a runway model, was not appalled, not even embarrassed. She thought it was cute and funny. I was appalled for her though. What was she teaching her child? It was okay to not work for money. It was okay to beg. Kids pick up on signals at very early ages. So I have advice for some of the students who will be entering the job market soon. If you want to stand out when interviewing, prove to the prospective employer that you put clients first. Don't ask for a company car. Don't ask for a club membership or 6 or 7 digit figure salaries. Once hired, work hard and don't take shortcuts. Shortcuts show that you are greedy, and greed proves that you put yourself first. Personally, I only hire people who I feel will reflect my ethical standards. Employers can teach anyone what they need to know. Ethical behavior is harder to teach. For those of you in a fortunate position to have more than one job offer, choose the employer with the highest ethical standards and practices. Don't get caught up in the employer's chase for profits above all else. In conclusion, I'm happy again to see the students participating in the inaugural Ethics Challenge, and I want to congratulate you for understanding the importance of ethics. The future of our financial markets will be in strong hands with you in it. Thanks too for the rest of you for showing interest in supporting ethical behavior. We need more like you to reach our full potential. And please don't be afraid to discuss importance of ethics within your workplace and lead by good example. After all, ethics is good for business and for your career. Thank you.
Maybe you made a comment earlier that part of the code is about distancing yourself from unethical behavior. But when does it cross from distancing yourself to taking the action to report unethical behavior that you're seeing?
That's a very good question. And this again is a sensitive subject because there is potential ramifications to the person doing the reporting. If there was a whistleblowing...
And there will be one immediately.
Absolutely fantastic. Glad to hear that. Okay? The first employer, I actually did report him. I reported him to the CMA, I reported him to the Central Bank of Kenya, I reported him to the Immigration Office, I reported him to the tax authorities, I reported him to the US Embassy. Did anything happen? Not a thing. As a matter of fact, I'm the one who got called into CID. It's true. Okay? He had a godfather. I did not. So you actually, it's very sensitive. So I think the CFA Institute doesn't actually say that you have to do anything reporting. It just says distance yourself. And I think that's the reason why they don't require you to do the reporting. Now, if you're a CFA charter holder, a CFA candidate, you are required to report yourself to the CFA Institute. But you're not necessarily required to turn yourself in to the legal authorities or to the regulatory bodies. But with whistleblowing, I think that will go a long way.
Very often whistleblowing is used as a mechanism for victimization, for anti-competitive behavior. So it's a loop. That there has to be ethics in the whole, and integrity in the whole process.
I agree.
But it is a necessary step.
I agree. The CFA Institute actually will punish anyone who falsely reports a CFA member or a candidate. They with themselves will be found in violation and can be kicked out of the Institute. So I acknowledge that people do have different motivations for reporting people, and it needs to be looked at.
You know, actually, your question is extremely important, and I think the action you will take is fundamental and a brilliant one because it'll work. Having worked in the UK, I know that the Inland Revenue, that's the tax authority for the UK, has a hotline, a telephone line, and now they must also have a website and they encourage tips and whistleblowing. One of my lecturers was an ex-commissioner of income tax, and he was telling us that every single tip is taken very seriously. And I think to prevent it being used as a malicious instrument, every tip must have backup information. So the whistleblowers must be encouraged to say, look, they must be prepared to give dates, names, serial numbers, and so on. So going in that direction is the right way.